Mr. Kramer received his Juris Doctor from the Catholic University of America in Washington, D.C., and a Bachelor of Arts from The Ohio State University. Hi, Phil. Thank you so much for taking time and speaking with me today.
It's my pleasure, Matthew. It's always nice to sit down with you. And thank you for giving me the opportunity to answer some of the questions that I know you have. There's so much going on these days. Homeowners have been getting information from newspaper articles, the internet, radio, hearing about the foreclosure situation, the banking situation. Right. We hear about robo-signing, documents being forged, outsourcing of loan centers to India, banks not using the TARP money the way that the government instructed them to use it. And it's important for homeowners to know that they have rights. There are things that they can do, but they need information, and they need to know that there are people out there that are willing to fight for them. They need to know that this is not their fault and that they have options.
Right. Going back to the representation itself, so again, this is not a loan modification process.
Oh, no, far from it. In a loan modification, and remember, loan modifications is something that the government said homeowners should do. Banks said, bring us your information and we'll modify your loans.
Right.
A loan modification is going to the bank with your hat in your hand and asking them to do something for you. We've learned that these robo-signing, forging document banks have no interest in granting relief, modifying loans. They like their loan portfolios the way they are. Why would they want to cut the interest rate? Why would they want to reduce principal? Why would they want to make less money? These banks have shown time and time again that they're either resistant, unwilling, or unable to modify loans. We no longer go in asking for modification, asking for the bank to be generous or to do what the government says. We go in with a club. We now make demands on the bank. We're tired of answering questions, resubmitting loan documents, resubmitting pay stubs, updating our information, elaborating on hardship letters, and having the bank say, you fell down one flight of stairs, that's not good enough. If you fell down 2 flights of stairs, we would modify your loan. It's outrageous, the things that are happening. We've seen that movie time and time again. We know how it ends. We're not seeking loan modifications. We're bringing it to the bank. It's time for the banks to start answering our questions.
This is such a great amount of information, a lot of factual information. You know, as a fellow litigator, I know that it takes an enormous amount of time to, develop your case strategy, develop your arguments, and then a whole nother stage of actually pushing for your results in that action. I want to know a little bit about why you're taking on this epic battle. Do you have any friends or family or know of anybody that's affected by this?
Doesn't everyone have family and friends affected by this meltdown? I consult with clients and prospective clients all the time. They tell me their fears and their concerns. They're all affected. We're all affected. And these people that call me up, they talk about the real estate prices have gone down. There's this real estate meltdown. It's not a real estate meltdown. It's a banking meltdown. It could have been avoided, and we are determined to make those people who caused this banking meltdown, we're determined to make them pay for their greed and for their wrongful actions.
Well, that's great. I've never really heard it put that way before, as not a real estate meltdown, but rather a banking meltdown. Does a customer need to be late on their payments?
Oh, no, absolutely not. Some of our clients have never missed a payment and have excellent credit. It's not a requirement. We have plenty of clients that are many months past due, some that have received notices from the bank. So we represent clients that have never missed a payment and never will, and others that have had sales postponed, they're post-bankruptcy. So it's not a one-size-fits-all, but we have clients that fit all of those different categories. There are some clients, in fact, this week I met with a client, excellent credit, never missed a payment. They want to sue their bank. They want to take a shot at getting their note completely voided, or they know that other people have had successful restructuring of their loans. They'd like to try to do that, but during the pendency of the case, they've assured me they'll never miss a payment, and that's fine.
Now, Phil, I've heard some homeowners will stop making payments on their loan during the loan modification process to help their cause. What would you say to them?
I would say that it doesn't necessarily help their cause, they just fall farther behind. We always suggest that borrowers continue to make their payments if they're legally required to make those payments. We've gone into court and tried to convince judges that the payments don't need to be they aren't legally required to be made. If we can convince a court or a bank's lawyer to forbear, then no payments will be paid by the homeowner, no payments will be expected while the case is pending. So that's something that we try to do. There are plenty of homeowners that are unable to make their payments, and that's just their situation. But I think that homeowners that are able to make their payments, that are legally required to be made, should continue to make their payments during the pendency of a case, unless we can get relief from the court or from the bank's lawyers.
All right. What effect would the mass joinder litigation have, say, on a homeowner that has a pending foreclosure? How would that affect them?
When we have received injunctive relief, we've been able to get a forbearance on all foreclosures and all notices of default. We've had a situation where a court has actually rescinded notices of default. And so in those instances, while we have a dialogue with the bank's lawyers and there's a spirit of cooperation, we can work through, in some cases, a forbearance or the ability for homeowners not to make payments during the pendency of the case. However, the bank is under no obligation to forbear, and people who don't make their monthly debt service payments are at the risk of foreclosure. So in those instances, sometimes we'll recommend bankruptcy, where we can steer them into a bankruptcy situation for protection, and that's appropriate in some cases.
Well, another question that commonly comes up is for clients that are a part of this litigation, are they going to keep receiving calls from the lender or the collection agencies? We know that people get swamped by these types of communications. Does that usually exist for people that are part of the litigation?
Well, every lender is different. Not surprisingly, a lot of the motivation of our clients is they contact us because they're in a situation where they're getting calls, and they want those calls to stop. Every lender is different. The lawyers for the bank would never contact a client represented by counsel, but some banks and some servicers will honor the fact that there's litigation and let the lawyers fight out the issues. Other lenders or servicers continue to have their call centers from India or other places hound the borrowers, and we bring that to the attention of the courts to let them know, and we've actually asked courts to intercede and ask the bank lawyers to talk to their clients to stop that, but every lender is different.
Okay, that's great. You say that this is a mass joinder litigation case then. Go ahead and explain a little bit of what a mass joinder case is versus, say, a class action suit.
I'm glad you asked me that, because there's a lot of confusion. People think that if there are 2,000 or 20,000 plaintiffs, it must be a class action. It is not. Let me give you the typical example of a class action case. And we've all seen this because we all get mail, and in the mail we get these notices about class actions. Let's assume that you have a cell phone, and in the small print of the contract of the cell phone, it sets forth the rules as to what the phone company can charge you for and how the charges are levied. And it turns out that on your particular plan, you spoke on the phone for 1 minute and 20 seconds, and the phone company billed you for 2 minutes. You didn't notice that. Nobody does. But as it turns out, through a glitch in their software or a decision that they made, they overcharged. Some lawyer found it. Some lawyer filed briefs, went into court, brought motions, and at some point, the cellular phone company admitted, "Oops, our bad. We overcharged, and we want to make that right. From now on, we'll fix our software. We'll pay the lawyers $20 million in legal fees, and for all of the people that had a cell phone plan, we'll send them a voucher where they get $1.15 off of their next bill or 10% off the next phone that they buy at a retail outlet." And we get these things. I get them. My mom gets them. Everyone gets these things in the mail. And it says, "Congratulations, you're part of a class action. There's a settlement. The lawyers are making $20 million. If you fill out this form in triplicate and you send it in, then we'll process a voucher for you for $1.15. If you don't want the $1.15, then fill out this other form and opt out so that you'll have the right to sue the cellular phone company yourself.
Well, and I think another thing that a lot of clients like is that they're not that they don't have to keep sending documents in. What about to your offices? If they are as a part of this mass joinder case, do they have to worry about sending documents back and forth all the time?
Well, the answer is at the beginning, yes. As we evaluate clients, we need to look at their documents. We need to see what arguments that we can make for them, what the best arguments are, the best strategy. So from a borrower's perspective, we need to see the documents that they have. We take the documents, we assemble them, we upload them into our database where all our clients' information is, and so we have that information. Once we have that information, that's all we need. We don't need pay stubs, we don't need hardship letters, we don't need updating of information, because for the arguments we're advancing, once we know the arguments to make, the particular documents are pretty irrelevant. We're really going after the bank, and they need to answer the questions. Clients love that. The communications afterwards are clients will have questions. They'll want to know what the status is on cases, and we update the clients as the litigation continues, if there are court hearings or court rulings, so that the clients get information from us. But we're not asking for additional information from the client at any time.
Right. Wow, that has got to be a huge relief for anybody that has ever tried to deal with their lender. Can you explain that a little bit further, why this is a banking meltdown?
Sure. Simply put, banks were in the business of making loans. Back 5 to 10 years ago, they had access to cheap money. Interest rates were low. You may recall everyone was refinancing at that time, and mortgage brokers were out there hounding people to refinance their homes, to get money out, to get home equity lines, to get money to make home improvements. Right. It was cheap money, and everyone was refinancing at the time. Lenders kept lending money, and it wasn't their money. It was other people's money. The banks, the big banks, weren't lending their money. They were getting money from other sources, cheap money, and they were making sure that they were putting it in the street and people were borrowing money. Their underwriting standards went out the window. They started the aggressive programs of the no-doc loans and the income-stated loans. Mortgage brokers would have a prospective homeowner or a borrower sign an application. Everything was done in handwriting, and then there would be a blank form that would get signed by the homeowner that would be filled in later on. It would be typed in. It would be neater information. And some of the information contained in those loans had no basis in reality. The banks looked the other way. Banks wanted to make these loans. Appraisals started going up. The banks started using appraisers that would make higher appraisals to make the loans happen. And what happened was real estate prices went way up, loans kept being made, and it's only because the banks were allowing for those loans to be made with other people's money. They were taking their points, they were taking their servicing fees, and the appraisals were sky high, and all of a sudden we found ourselves in a situation where people paid way too much money for homes. People that should not have qualified loans were hounded and pressured into taking these loans when they couldn't support it, and it was all a house of cards. The bankers didn't care. Some of them have already fled the country, the big ones, and their greed finally caught up with them. It could have been avoided. It should have been avoided, and they kept pushing these loans, pushing and pushing, and we're going after them because it's not right.
Well, there's going to be a ton of people interested in this. I know in speaking with my clients that I feel would benefit from this program, they're very, very excited, and I myself am too. I can't wait to continue to refer clients that are interested in this, that can benefit from this, to your services, and I want to thank you again for coming here today. How can people learn more about this process and learn more about and get more information regarding this?
Well, Matthew, you can always call me and as we work together. But for those that don't have a direct pipeline to me, just call the number on the screen or speak to somebody that can explain more information, and we can evaluate and determine whether your situation is something where we can help you. I hope we can, and let's see if you're qualified to join in one of our cases.
I feel you can as well. Thanks so much.
Thank you.
All right.
Okay.